everyone. Today we're going to be talking about credit and in particular FICO scores. What is a FICO score? A FICO score is a numeric representation of a person's credit worthiness. In other words, do you pay your bills on time? What does FICO stand for? FICO stands for the Fair Isaac Company, and the Fair Isaac Company is a California firm founded in 1956 by Bill Fair and Earl Isaac. They specialize in predictive analytics. And what is that? They take information from your payment history and they analyze it to predict what will happen next. So if we look at your credit payment history, if you've been paying your bills on time in a good manner, then in the future they predict that you will also do the same. Okay? So lenders want to know your FICO score to see if you are going to pay back your debt. If they are going to lend you hundreds of thousands of dollars, will they get that money back? They look at the FICO score and your own personal history to figure that out. So FICO scores are used in over 90% of all lending decisions in the United States. Those lending decisions include auto loans, mortgage loans, credit card applications, home equity loans, line of credit. All of those things all roads lead back to a FICO score. So what does Bill and Earl's company analyze? They analyze your payment history, the amount of debt you currently owe, the length of your credit history. Do you have decades of credit history, or did you just open up a credit card application last week? They look at that. What type of credit do you have? Is it revolving credit, which are your credit cards, or installment loans, which include car or motorcycle payments, student loans, and mortgages? Do you have any bad credit? Do you have collections? Do you have late pays on your credit cards? Any foreclosures? Foreclosures will stay on your credit report for 7 years. Any bankruptcies? Bankruptcies will stay on your credit for 7 to 10 years, with a Chapter 7 bankruptcy staying on your credit for 10 years and a completed Chapter 13 bankruptcy staying on your report for 7 years. So what is a FICO score? Dun, 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 dun. I was told I needed visual effects, so here's a visual effect, okay? So what is a FICO score? A FICO score is a number between 300 and 850. Why those numbers? I have no idea. We have to ask Bill and Earl, but I don't have them nearby. But they came up with these numbers. So the FICO score summarizes a consumer's credit worthiness. Do you pay your bills? So the higher your FICO score, the better that is. So we've got 4 or 5 different categories. Less than 580 indicates that you have poor credit. 580 to 699, you're fair. 670 to 739, you're good. 740 to 799, very good. And then over 800, dun dun dun, you are excellent. A FICO score over 740 demonstrates to your lender that you're a very dependable borrower and you pay your bills on time. So because of that, you may get better interest rates or more loan programs available to you, the better FICO score you have. But again, a FICO score does not guarantee you're going to get your loan. It just guarantees, it just indicates, not guarantees, it indicates what your payment history is. Okay, FICO scores are industry specific. What is acceptable for a credit card company may not be acceptable for a mortgage company, which may not be acceptable for a mortgage company. They all grade the FICO score a little bit differently. So remember, a good FICO score doesn't always guarantee that you'll automatically get your loan. And then I will discuss that a little bit further in other videos. So the next video, we will discuss how to improve your credit score. Okay, everyone, have a great day and pay your bills. Okay, bye.